Hey everyone, welcome back to Corporate Decoder, where we decode the financial mysteries of the business world. Today we're diving into the latest quarterly report from IP-PALCOM Incorporated, and let me tell you, it is a spicy one with a story that sounds like it is straight out of a courtroom drama. Before we dig in, if you like getting the real scoop on companies, make sure you are subscribed and hit that notification bell. And hey, we've got a thriving community over on our Discord server too. Link in the description below. Come join the conversation. Alright, let's pull back the curtain on IP-PALCOM Incorporated as of the 31st of December 2025. This company is really trying to make its mark in the voice over Internet Protocol or VoIP world with its patents. But as these financial statements show, it has been a long and tough road. Looking at the balance sheet, which is like a snapshot of the company's financial health, we see some interesting numbers. As of the 31st of December 2025, their total assets were about $694,000, down from over $1 million back in September. That is a pretty significant drop in assets. Their cash position also took a hit. They had about $586,000 in cash at the end of December, a big drop from over $1 million in September. This tells us they're spending money faster than they're bringing it in, which isn't ideal. On the flip side, their total liabilities, meaning what they owe to others, were about $142,000 at the end of December, down from $173,000 in September. So they are paying down some of their debts. Now for a really important number, deficit, this is like the company's accumulated losses over time. At the end of December 2025, they had a deficit of an eye-watering $110 million. That is a huge amount of red ink, and it has even grown from September when it was about $109 million. This tells us the company has been losing money for a very, very long time. Let's look at how they did in terms of actual earnings, or in this case, losses, over the last few months. For the 3 months ending the 31st of December 2025, their net loss was a heavy $19,000. Compare that to the same period in 2024, where the loss was about $511,000. So their losses have actually gotten worse by almost 80%. What is driving these bigger losses? A huge chunk of it is professional fees and services, which jumped from about $201,000 in 2024 to over $643,000 in 2025. That is a massive increase, over 3 times what they were spending. This suggests they are pouring a lot of money into legal and other expert help, which is often related to their ongoing patent battles. You'll notice their loss per S-hair is a tiny fraction, basically zero for both periods. This is because they have so many shares outstanding, almost 3.8 billion. Even a significant loss spread across so many shares makes the per share loss seem very small. Now let's talk about cash flow. This shows us where the money is coming from and going. For the 3 months ending the 31st of December 2025, they used about $518,000 in operating cash. This is slightly better than the $576,000 they used in the same period in 2024, but they are still burning through cash. Where are they getting money to keep operating? Well, they got $45,000 from a private placement, which means they sold some stock. This is a typical way for companies in this situation to get cash, but it also means more dilution for existing shareholders. Overall, their cash decreased by about $473,000 during the last quarter of 2025. And when you add that to their starting cash, their cash balance at the end of December was about $626,000. Again, not a huge amount when you consider their ongoing expenses and losses. This statement of stockholders' equity gives us a look at the changes in what the owners have in the company. We see a lot of activity here with shares being issued and options being exercised. The additional paid in capital account is where we see a lot of the money that has come in from selling stock above its face value. It has grown significantly, reaching over $107 million by December 2025. This shows that while they're losing money overall, they have been successful in raising capital by selling stock. We also see the loss for the period impacting the equity, with millions in losses deducted each quarter, showing the continuous drain on the company's value. The company themselves admit in their own report that there are material uncertainties that cast substantial doubt about the company's ability to continue as a going concern. Basically, they are saying they might not be able to stay in business much longer without more money. This is largely due to their ongoing patent litigation, which is incredibly expensive. They have to raise money just to defend their patents and try to prove they are valuable. If they lose these battles, it could be game over. They mention fair value measurements and a hierarchy of levels 1, 2, and 3 for how they value things. Level 1 is easy, it is just the price on an open market. Level 2 involves a bit more estimation, and Level 3 is pretty much guesswork based on unobservable data. For a company like this dealing with patents and potential future deals, much of their value likely falls into that trickier Level 3 category. A big part of their story is the 2013 acquisition of Digiphonica. They bought this company for a lot of cash and a huge chunk of their stock. The deal had complex clauses about keeping an original seller's ownership percentage, which led to the company issuing a lot of warrants and preferred shares over the years. This complexity is now a big part of their financial structure. This section is where things get really interesting and also a bit concerning. The company has issued a mind-boggling number of warrants. As of the 31st of December 2025, they have nearly 3.9 billion warrants outstanding. Warrants are like options that give the holder the right to buy stock at a certain price. Looking at the outstanding warrants, many have very low exercise prices like $0.001, and there are hundreds of millions, even billions of them. This means if the stock price ever goes up even a little bit, a vast number of these warrants could be exercised, leading to massive dilution for existing shareholders. They are essentially setting themselves up for a situation where existing shareholders could see their ownership stakes shrink dramatically if the stock price ever moves favorably. They also have stock options, which are similar to warrants. They have about 274 million options outstanding, mostly with an exercise price of $0.005. Again, these are very cheap options, and if the stock price were to rise, it could lead to significant dilution. This is where the big drama unfolds. IP-PALCOM has been involved in a series of patent lawsuits against giants like Amazon, Verizon, and T-Mobile. Most of these cases, as you can see here, have been dismissed or settled. Some were dismissed by the company itself, while others were dismissed by the court. The cost of these legal battles is astronomical, and clearly a major drain on the company's resources. Beyond patent fights, they've also been in other legal battles, including one with Locksmith Financial Corporation. After a long back and forth, including an appeal, they settled that case by issuing 30 million restricted common shares. This settlement further dilutes existing shareholders. They also mention another ongoing antitrust litigation case that is still too early to predict. This is where the company admits to serious issues with their internal controls. They state that their disclosure controls and procedures were not effective. This means they might not be able to reliably record, process, and report financial information on time. This is a big red flag for investors. They further explain that there are material weaknesses in their internal controls. These include no formal code of conduct, no dual authorization for bank payments, and a general lack of reconciliation and reviews. In plainer terms, they don't have strong enough internal processes to prevent errors or fraud, and they admit it. This lack of robust internal controls, combined with their ongoing legal battles and massive share issuances, paints a picture of a very risky investment. So, what is my take on all this? IP-PALCOM is a company fighting a very tough battle to monetize its intellectual property. They've got patents, but a lot of money is going into legal fees. And they're issuing shares and warrants at a staggering rate. This creates massive dilution risk for anyone holding their stock. While they are trying to generate revenue, the current financial picture shows significant losses and a questionable ability to continue as a going concern. The fact that they admit to material weaknesses in their internal controls is also a serious concern. It feels like a company in a constant state of survival, heavily reliant on raising capital and deeply entangled in legal disputes. This is a very speculative investment, and investors should be extremely cautious. Alright, that is our deep dive into IP-PALCOM Incorporated's latest report. What are your thoughts on their patent strategy and the financial situation? Let me know in the comments below. If you found this breakdown helpful, give this video a thumbs up, and if you want more financial insights like this, hit subscribe and the notification bell. And don't forget to check out our Discord to keep the conversation going. Thanks for watching, and I'll see you in the next episode of Corporate Decoder.